Start with the breaking news on inflation figures. Capriti's here. Good morning. Tell me.
Good morning, Kate. Yeah, so the inflation rate came in at 2.6% for November, up from 2.3% in October, and crucially, even higher than the Bank of England's 2% target that it was the previous month. Bit of context to all these figures. It's worth bearing in mind that this is a world away from where we were a couple of years ago when inflation was hitting the double digits, 11.1% it peaked at. But that's not exactly a high bar for us to be aiming for. It's now considerably lower than that. Inflation has broadly been coming down. The Bank of England is cutting interest rates. Nevertheless, it is still above the bank's target. And some economists, they are getting jittery about this because the fear is that Rachel Reeves's budget might not have helped the cause. Big increase in public spending, the increase in national insurance contributions could lead to prices rising even further, meaning that inflation will take longer to come down to target. And let's not forget that although inflation has broadly been coming down, we're still living with the consequences of the cost of living crisis because prices are still a lot higher than they were back in 2021. The price level is high, even though the inflation rate is coming down. They're about 20% higher than they were back in 2021. So people are very sensitive to inflation going up. And then the question on the back of all of this is, what does that mean for interest rates? Well, it's made it less likely that the Bank of England is going to cut interest rates again tomorrow, not just because of the headline inflation rate, but also because of other things like wage growth. Wages are growing at 5.2% in the economy. That's far too high for the Bank of England's comfort. So it means it's probably going to have to take a more cautious approach than our neighbours in the Eurozone, for example, and hold interest rates again tomorrow.